Well, hello again, everybody. This is John Norris at Trading Perspectives. As always, we have our good friends, Sam Clement and Courtney Tross. Y'all say hello.
Hello.
How's it going?
I'm doing fantastically, and here we are, gang, the last week of 2021. I can't believe it, because remember last year in 2020, we were going, 2021 certainly has to be better.
Yes, it was going to be the best year after 2020.
Well, it was 2 weeks to flatten the curve to start it.
It was 2 weeks to flatten the curve. We were all going to be united. Everything was going to be better. COVID was going to be in the rearview mirror.
Yeah, COVID was going to be over.
And Washington was going to be getting along with one another. It was all going to be one big kumbaya fest. And all you can say is, we got them next year. Yeah. Wait till next year, guys. Maybe 2021 didn't pan out the way that we all would have liked. Markets were good for most of it. Lots of easy money going about. Overall economic activity throughout most of the year was pretty good. U.S. was the best place to park your money, which it has been for a while. No one got paid anything on their cash deposits. The Federal Reserve showed up with the punch bowl and kept it there for pretty much the full year. Washington, spent much more money than it has and is planning on spending some more. And so here we are at the end of 2021. Unfortunately, not as much has changed as we would like. We still have COVID around. People worrying about the Omicron variant. And even so, doing what we do for a living, it's time to make some predictions of what 2022 is going to be.
That's right.
What's the new normal going to be? Part 2 or 12. Something like that. I didn't take French, and I apologize for that. Now, Sam and Courtney, my first one, and I think this is going to be one of those ones that's going to be just a slam dunk, is it will be a lot harder to make money in the financial markets next year, but U.S. stocks remain the most reasonably valued of all overvalued asset classes. Your thoughts on that, Courtney?
So it's basically stay with what we've been doing, right?
Well, that's just a low-hanging fruit, because while we do think the economy is going to slow somewhat, still think the U.S. economy should grow. There's still tons of cash out there sloshing about. No matter what the Federal Reserve does next year, if it's 1, 2, 3 rate hikes, monetary policy is still going to be very accommodative and loose by historical standards. Still have a lot of tailwinds out there. So I still think that the economy should grow. When the economy grows, corporations tend to make money, and when corporations make money, stock prices normally go up. That's kind of the low-hanging fruit. So I do think we should be able to make money in the markets next year. It's just not going to be as easy as it has been the last 2 years, where simply all you had to do is pull your chair up to the table, bring your cup to the punch bowl, all that stuff. People that do what we do for a living will have to work for a living. How about that, Sam?
I think absolutely when you talk about economic growth and that leading to stock performance, and I think it was Peter Lynch who said over the short term those two don't always have to line up,
That's
but
right.
Over the longer term those have 100% correlation. The strength of the company, the strength of earnings, and the strength of the stock itself. So I do think you're right still. I think it's a lot gloomier or cloudier outlook for some other countries than it is here in the United States.
Okay, now that's one prediction. Now I'm going to ask one question. This is something this is a question, but it's also going to be a prediction on your part. Once you put on your thinking caps, put on your Swami things, and whatnot, and take a look at your crystal ball. And Courtney, I'm going to ask this question of you. Who do you think is going to be the biggest individual taxpayer in the United States next year?
Well, based off what Sam said last week, I would lean on Elon Musk.
And why would you say that, Courtney?
Well, because he tweeted out that he was going to be paying $11 billion.
$11 billion. Can you imagine that?
No, I can't imagine.
I can't even imagine having that amount of money, let alone paying that amount in
I don't like
taxes.
paying any tax, let alone $11 billion. So.
Can you? So yeah,
It's just like
but he's
my
still
children.
such a greedy person, right?
well, yeah.
Depends who you listen to.
Well, it all depends on who you listen to, but that easily is going to be undoubtedly the biggest
Single tax bill.
in nation's history. I can't imagine anything more than that. And that must be a bitter pill for him to swallow. But for the fact that, got a couple hundred.
Doubled his net worth over the last year.
Got a couple
Tripled
$100
it
billion
almost.
more to go. That's really to show you how obscene that is. That's kind of a rounding error for him.
Yeah.
It'd be like you paying $10 in tax or $100 in. I don't know what your situation is.
$10 probably more accurate.
All right, Sam. I've done both of them so far. What do you say?
I got one for you. Okay. So next year is obviously we're always looking towards an election, and we have the midterms coming up. And I think we're going to see a clean sweep in the House and Senate for the Republican Party.
Why do you think that?
Well, one, I think that's just naturally that happens a lot when one party takes over in the presidency. You see the House and Senate go the other way.
Right.
And I think you look at Joe Biden's polling numbers, you look at the recent elections in Virginia and New Jersey, and a lot of Republicans have gotten out to vote in areas where Democrats have typically been very strong in blue states or purple states. Some of those were very strong elections for the Republicans, and New Jersey's one that sticks out to me, where the Republican didn't win the governorship. However, he wasn't even supposed to be anywhere close, and it was a nail biter. So I think you're going to see a clean sweep in both the House and the Senate.
What do you think, Courtney?
I don't know, but I think that kind of based off your predictions, people typically vote, along their heartstrings. They might have certain issues. They might vote party line. I mean, I'm sitting here saying, like, there's several different scenarios, but I know for me personally, like, I do vote with how well I'm doing. So if we think it's going to be a stagnant year, while the government might or might not have direct, effect of that, I think that you will see a complete turnover. If people are not doing well, if they feel like they're struggling, if they feel like the government hasn't done enough, then I feel like we will see a mass exodus of the controlling party.
Wasn't it 2010 when Republicans swept under Obama?
Yeah.
I think it's going to be pretty similar to that. Then.
Well, there's a lot of time left between now and next November, and anything can happen. But Sam, you're right. Taking a look at current polling data for both the president and the Congress, it doesn't look good for the Democrats. However, the message can change. They could, campaign towards more of a moderate type of approach.
Yes. It's got to stop being like such extreme.
Now who's going to do that though?
But the problem with it really is, for what I am seeing currently, is the American population is just being forced to vote against people.
The lesser of the evils.
Lesser of the two evils.
Yeah.
And, the Republicans, in my estimation, if they want to be the party in power and they want to stay the party in power, have better come up with a better narrative and a better way of doing it. Because right now, it's like, I don't think the message is necessarily out there. It's just the Democrats have shifted so far left during Biden's first year in office that they find themselves underwater in terms of polling.
Well, I think you're absolutely right. But on the flip side of the voters, the politicians have also taken elections recently as mandates for what they were voting on, when it was exactly what you were saying. People were voting against someone, not necessarily voting for someone. And so I think it was pretty inaccurate for some of these politicians to say this was a mandate on what we were selling.
Yeah, and I would tell you, Sam, going back to your original question of me, if I had to bet $10 of my own money right now about that,
only $10.
Listen, I'm not sticking my neck out too far on this one. I would probably bet, if I had to bet one way or the other, I would bet your way. However, I would not be too comfortable betting too much more than that, because, as Courtney, who lived in D.C., will tell you, politics is weird, and it can change much more rapidly than any of us can imagine. But right now, I'd say that you're probably directionally accurate.
Fair enough.
There you go. All right, Courtney, I'm going to throw this one at you. China and Russia will continue to push the proverbial envelope, forcing the administration to devote more time to international affairs at the expense of pet domestic projects. What do you think about that one?
Yeah, I agree with that. And I think that makes me probably more nervous than any of your other predictions. Mostly because I don't feel comfortable with the potential outcome. And there's just so much that we don't know. And it is scary when you look at the amount of information that is being suppressed out of China. And I'm just very curious. But I don't want it to go in a negative way, obviously. I don't want there to be war. And it just seems like there's a lot brewing that we're just not aware of.
Well, Sam is actually for war. Isn't that what you said?
Right.
As someone who could be
drafted?
thrown into a war. Not really for a war in Taiwan or Ukraine.
Well, I mean,
with me being a part of it,
right?
Yeah.
Do y'all,
that's my self-serving interest.
Yes, I mean, do y'all foresee? Is that kind of part of also your thoughts on predicting that international is not the place to be in the market because of potential unrest?
Well, I think China is that is all part of it with how big of a player China is in the international market, and especially in the emerging market. I mean, you can't. It's hard to not be impacted by China if you're invested in the emerging market. So I think for China, more so than Ukraine or anything like that, I think it is a huge factor that you have to look at. Because
no, go ahead.
it's just what we're seeing, especially with China, is going back to like a more extreme communist party than this, two parties, one nation, what have you.
Yeah. And this is a point in the program, Courtney, when I give some caveats, and that being that we might start discussing a little bit of Oakhorse investment philosophy. Please know that past performance is not indicative of future results. Conditions can change, market fluctuations will vary, and that any actions that you take after listening to this podcast, you do so of your own volition and have not been coerced by Oakworth Capital Bank, nor have anything that we're going to say should be considered offers to buy or sell investment securities or services of any type.
Sounds like you've said that before.
Yeah, I have said it.
Rolled off the tongue.
Yeah, well, Courtney, I mean, you're kind of going to your question about why we continue to like the U.S. Sam did a pretty good job mentioning the emerging markets. And when you take a look really at where China has positioned itself largely this year, but Xi had been kind of doing this for a number of years, but it really became very painfully apparent this year. The game is changing in China. It is truly a communist dictatorship with now a dictator for life. The recent Hong Kong elections, where the People's Party or whatever New Freedom Party or whatever they called it, essentially the party that Beijing backed, won all the results just very easily. Whatever's going on with that tennis player, whatever's going out in Xinjiang province with the Uyghurs, there's a lot going on over there that suggests that the Communist Party, after years of kind of letting capitalists kind of run amok, are starting to rein things in there. Mm-hmm. So that intuitively for me would not be good for the private sector in China.
Absolutely.
As for the developed markets, the remainder of the G7 besides ourselves, Japan just has some very serious demographic headwinds. It's going to be difficult for to grow its way out with this aging population. Canada is so reliant on trade with the United States, and in particular, the trade in fossil fuels. And it might surprise people that Canada's biggest export to us is actually crude oil. And if we block pipelines from Canada, and if we put taxes on fossil fuels, that's going to be bad for Canadian economic growth. And then we have the Europeans, which seem hell bent on shutting down their economies every time there's another COVID virus, and obviously demographic tailwinds against the Europeans as well. So they just kind of take a look at everything that's out there, and the U.S. still remains poised to be the engine for economic growth, at least in terms of absolute terms across the entire world. Now, we talked a little bit about China in terms of the Russians. Russians really have Western Europe where they want them. It's Vladimir Putin can cut off the natural gas, and Western Europe freezes. Western Europe puts sanctions on Russia for what they're doing in the Ukraine. Well, Western Europe freezes. So, right now, Putin is playing cards, and he's got 3 aces right now, and it's just going to be kind of difficult for the Europeans to get around that. So that's kind of how I'm viewing that. Sam?
No, I completely agree.
With the human rights violations going on in China, do you think that would encourage any U.S. companies to maybe get their products made somewhere else?
Not really. I think
the bottom line, it just makes economic sense.
For a lot of
China.
these companies, that is too important. I think you are seeing some diversification out of China, but I don't necessarily think that is why. That's just my 2 cents.
Well, I would agree with you on that. And what's kind of strange is some of the companies which seem to be more progressive, at least their CEO or their management more progressive here in the United States, have a disproportionate amount of their business coming out of China.
Specific regions of China.
Specific regions of China as well. I mean, Nike has been well known for its relatively political politics, and it does most of its manufacturing, if I'm not mistaken, in China. China is now one of Coca-Cola's largest markets, and China is now represents a huge amount of revenue for a lot of U.S. multinationals.
NBA.
It's just going to be very, very difficult. But eventually, Xi's going to want the foreigners out.
I agree. I got another one for you then.
What's that?
I guess it's really my prediction 2A and 2B, but I'll start with 2A. I think sometime next year, before the end of 2022, we'll get a CPI print year over year of less than 2%, which 2 years ago would have barely been a prediction. But with the new COVID environment and the extremely high prints that we've had lately, I would say that is maybe sticking my neck out there a little bit.
I think you are sticking your neck out there a little bit, but then again, I thought I was going to stick my neck out there by saying my prediction would have been that inflation will not be anywhere near as bad as what a lot of people are predicting right now. I mean, some of the people on the TV and in the media are saying it's here to stay. It's here to stay. Well, it's going to be here to stay until the U.S. economy starts to slow a little bit, which most people are predicting. Not falling apart, but just slowing a little bit. And then when the Fed takes the punch bowl away, that will ultimately play a part. So I'm not necessarily thinking that they're going to drain excess liquidity out of the system, but they're just not going to add to it. As a result, there's going to still be a lot of money sloshing about, but not the same amount that has caused inflation to percolate. And then, oh, by the way, if the U.S. economy cools a little bit, consumer demand will cool a little bit, and so supply chain disruptions will ease, and all that stuff, which has led to a perfect storm here this year, won't be in place. So I don't think if we're still talking about a 6.8% CPI or whatnot this time next year, I'll buy you each a bottle of wine.
Oh man, I really thought he was going to go with a steak dinner.
No, I'm out. I can't do that.
But
I
Costco bottle of wine.
Yeah. Chuck Shaw.
Even we talked about the Federal Reserve throwing out the word transitory, but then you read their statement and they're still talking about transitory. So they may have thrown the word out, but they are still believing that a lot of the inflation, and I am too, is from things that are working themselves out within the supply chain.
I guess it all depends on what your definition of transitory is.
That's I think why they threw it out, was people's confusion over that and thinking that may mean 2-3 months or 6-12 months or
2-3 years.
Yeah, 2 or 3 years. Do y'all predict that the labor shortage, there would be a correlation to kind of your point about supply and demand, but that if there's less money going, less, thick wallets, right, that more people will need to go back to work, but yet there might be not as high of demand for workers if the demand for the goods is not as high?
Well, it's hard to predict that job openings will continue to grow the way that they did this year, with over 11 million jobs currently being open according to the most recent BLS estimates. Courtney, a lot of the job openings is due to the fact that older workers during the COVID just simply got out of the workforce, and
right.
they just haven't gone back. Yeah, some have, but in terms of percentage, I think a labor force participation rate by people 65 and plus dropped 6 percentage points during 2020, and it hasn't gone back up. For people 55 plus, it dropped like 6 percentage points and also as well, and it just hasn't gone back up. In the meantime, younger people's participation rates has gone up, just nowhere near as fast as they need to in order to absorb the job losses at the older end of it. And when older, more experienced workers get out of the workforce, it's a virtuous cycle where people are moved up, and we just haven't had enough new people come in at the bottom to take some of these hourly jobs that people have always wanted. That's what a huge number of the job openings are these jobs that, hourly work, which eventually will absorb either through new workers or new technology. Sam?
I agree. I'll give you 2B real quick then.
Okay.
So I think we're going to get a lower CPI print, and I think partially, at least because of that, I think the Fed's only going to hike rates one time next year, which, again, even a few months ago may not have been too big of a prediction, but now they're coming out saying 3 rate hikes, and I'm calling their bluff on that one.
Well, and doing this for close to 30 years, actually, for more than 30 years, every time you try to predict the Fed 12 months out, you find out that you're predicting nothing. You're just wasting your breath. You could be onto something. I wouldn't make a bet one way or the other that much. I think we definitely will have at least one, but there's a lot that can change between now and then. We could have more turmoil with China and the Russians. This winter something could happen. Black Swan event. More lockdowns and all that good stuff. If left unfettered, I would say probably 2 or 3 might be in order. However, I would say, really, if I were to bet again that $10, I'd bet probably $100 on at least one, and I wouldn't bet more than $20 on two or three. So you could be onto something. just trying to pinpoint the Fed 12 months out is almost a thankless
And
proposition.
people are always wrong
People are
with
always
that
wrong.
prediction.
Well, they always have been, and
Yeah.
they always will be. One final prediction, and you guys tell me what you think, and then we'll go on. Academy Awards. 2 parts.
Here,
One-
this is where I can add value right here.
All right, let's all make our prediction for.
West Side Story.
It's. I predict West Side Story is going to win most of the major awards in a while. Courtney, your thoughts?
I haven't seen it, so I can't speak to it. And I haven't seen House of Gucci, but I also have heard good things about that movie. And I can't really tell you. Oh, Spider-Man was also apparently really good.
Oh, really?
I don't think they'll win awards.
And I think I can.
Sam's Googling the movies right now.
I'm trying to think of the ones I've seen. I think Dune, if that's up for some, I think that'll win a few. That's
there-
a pretty good movie.
There you go. All right. Well, that's put $1 out there with each of you all.
Yeah.
West Side Story wins Best Picture.
I'll go with Dune on that one.
Okay. How about you?
I mean, I guess I'll. I don't want to take House of Gucci on that. I don't know. I need additional time to think.
Okay, fair enough. All right. Guys, thank you all so much for another great year here in 2021 at Trading Perspectives. We always love to hear from you also. If you have any comments or questions, please, by all means, let us know. You can always drop us a line at tradingperspectives@oakworth.com, or you can leave us a review on the podcast outlet of your choice. As always, if you have any questions about what we have to say or how we think, you can always go to oakworth.com and leave us a review underneath the Thought Leadership tab, which has all kinds of fun information inside. Y'all have anything else to add here at the end of 2021?
That's all I got.
That's it. Happy New Year.
Happy New Year. That's all I've got to do too. Y'all take care.